It is starting. While the world is distracted by entertainment, social media, and daily headlines, three massive red flags have just appeared on the financial horizon. These are not just market fluctuations. They are the first signals that the 2026 liquidation has officially begun. If you have been following this channel, you know that we have been warning about the wealth trap. But now, the data is showing that the trap is starting to close. In the next 8 to 10 minutes, I will reveal the 3 specific signs that prove the collapse is underway, and, more importantly, what you need to do in the next 24 hours to protect your assets from being liquidated by the system. Sign number 1. The unprecedented move in the overnight lending markets, also known as the repo market. To understand why this is a liquidation signal, you have to understand the plumbing of the global economy. Banks move trillions of dollars every single night to keep the system liquid. They lend to each other so that everyone has enough cash to cover their daily requirements. But recently, we have seen a massive spike in the cost of this liquidity. Banks are becoming terrified of lending to each other because they don't trust the collateral. When the plumbing of the financial system starts to freeze, it is a signal that the big players know a crisis is imminent. We saw this exact pattern in 2008, right before Lehman Brothers collapsed. Most people didn't notice it then, and most people aren't noticing it now. But this time, the scale of global debt is 10 times larger. In fact, global debt has now surpassed $300 trillion. This is a number so large it can never be repaid with current currency values. It is a mathematical impossibility. The only way out for the system is a massive liquidation event where your savings, your pension, and your purchasing power are used as the collateral to reset the balance sheets of the elite. History tells us that when debt levels reach these heights, governments have only 2 choices: hyperinflation or a total reset. They either print the money into oblivion, making your savings worthless, or they let the system crash and rebuild it from the ashes. By 2026, the interest payments on this debt will consume almost all tax revenue in the major economies. This means the system will no longer be able to function as it does today. We are moving toward a period where the safe assets of the last 40 years, like government bonds and cash in the bank will, become the most dangerous things to hold. This is the first sign that the liquidation is no longer a theory. It is a mathematical certainty that is playing out in the shadows of the banking sector while you sleep. Sign number 2. The aggressive gold accumulation by Eastern central banks and the BRICS nations. Ask yourself a simple question. Why are the people who print the money suddenly buying something they cannot print? For decades, central banks were net sellers of gold, trying to convince the public that it was a barbarous relic of the past. But in the last 24 months, that has completely reversed. They are buying gold at record levels while telling you to keep your money in the digital banking system and trust the stock market. Fact, central bank gold buying has reached a 50-year high. They are hedging against the very system they manage. They know that the 2026 reset will require a new monetary anchor, and gold is the only asset that has survived every currency collapse for 5,000 years. If the people in charge are exiting the burning building, why are you still sitting in the living room? This is a clear indicator that the shift to hard assets is no longer optional. It is a matter of financial survival. The elite are preparing for a world where the dollar and the euro are no longer the primary stores of value. If you don't have a plan to move at least a portion of your wealth into physical assets, you are essentially volunteering to be part of the 99% that loses everything. Wait, let us take a moment for a critical reality check. This is something they never taught you in school, and for a good reason. The system relies on your ignorance. Do you know how much of your bank deposit is actually backed by physical cash in the vault right now? Option A, 10%. Option B, 1%. Option C, 0%. Take a deep breath and leave your guess in the comments right now. I will reveal the shocking truth in exactly 2 minutes, and it might change how you view your bank account forever. This is the most important lesson in financial literacy you will ever receive, so pay close attention. Sign number 3. The silent crash of the bond market. This is the most important sign, yet it is the one the mainstream media talks about the least because it is boring. But make no mistake, bonds are the foundation of the global financial system. They are supposed to be the safe haven for pension funds, insurance companies, and retirees. But right now, we are seeing a historic sell-off in the bond market. When bonds fail, interest rates skyrocket. This is the ultimate catalyst for the 2026 wealth trap. As rates climb, the cost of everything goes up. It destroys real estate prices because mortgages become unaffordable. It makes your credit card debt, student loans, and car loans unmanageable. This is how the liquidation happens. The system intentionally raises the pressure until the 99% are forced to sell their homes, their stocks, and their assets at the bottom just to survive. This isn't an accident, it's a calculated transfer of wealth. Look at what happened in the UK in late 2022 when the bond market almost collapsed in a matter of hours. The central bank had to step in with billions of dollars just to prevent pension funds from going to zero. That was a dress rehearsal for what is coming in 2026. Think about the psychology of a crash. When the market starts to drop, the elite don't panic. They have the liquidity to wait. But the average person, burdened with debt and living paycheck to paycheck, is forced to sell. The 2026 liquidation is designed to be even more efficient than 2008, with the rise of central bank, digital currencies, and advanced AI monitoring. They won't even need a traditional bailout. They can simply adjust the rules of the system in real-time, freezing accounts or implementing bail-ins where your deposits are converted into failing bank shares. If you are holding all your wealth in a single bank account, you are providing the liquidity for their survival. You are the lender to the bank, and in a crisis, the lender is always the one who takes the haircut first. The answer to our quiz was option C, 0%. Since the reserve requirements were officially moved to zero in 2020, your deposit is technically an unsecured loan to the bank. They are not required to keep your cash in a vault. They lend it out or invest it in the very bonds that are currently crashing. This is why a liquidity crisis is so dangerous. If everyone tried to withdraw their money tomorrow, the system would collapse in minutes. This is why they are pushing for a cashless society, so you can never take your exit from the system. They want your wealth trapped in a digital cage where they can tax it, freeze it, or inflate it away at the push of a button. So, how do you escape the 2026 liquidation? You must act while the doors are still open and the exits are not yet blocked. First, move a portion of your wealth into assets that exist outside the digital banking system. Physical silver and gold have been the ultimate insurance for 5,000 years because they have no counterparty risk. If the bank closes, your gold is still your gold. Second, eliminate all high-interest debt immediately. In a liquidation event, debt is the anchor that will pull you under. Debt gives the system power over you. Third, diversify your geographical risk. Do not keep all your assets in one country or one currency. The 1% always has an escape hatch. It is time you built yours by acquiring international skills and assets. Fourth, and most importantly, invest in your financial education. The greatest asset you have in a crisis is a mind that can see the trap before it closes. The signs are everywhere if you know where to look. The overnight markets are freezing, central banks are hoarding gold at record levels, and the bond market, the very foundation of our world, is crumbling. The liquidation has begun. You can either be a victim of the crash or a survivor of the transition. We are here to make sure you have the tools, the data, and the mindset to be a survivor. Make sure to subscribe to Mind of Money for our daily updates as we track these 3 signs in real time. Hit the like button if you are committed to protecting your future and your family. The clock is ticking, and the trap is closing faster than most people realize. I will see you in tomorrow's urgent update.